This is intraday trading using market maker sell model. Me entering on smart money reversal, me entering on low risk short, holding through first stage distribution, second stage redistribution. There, sells off heavy. Institutional order flow can be visually represented inside of the open, high, low, and close of a candlestick. Okay, they can't hide it. They cannot hide it. What do I mean by that? Well, if we, I'm just going to extend this over just a little bit. Friday, look where we closed. We closed at the low of this SIBI. That value is this candlestick's high, which is 30,157.75. So just remember 57.75. This candlestick's close, 54 even. So it's 3.5 handles lower than this candlestick's high, which is the low of this sell side imbalance, buy side inefficiency. If it were indeed bullish, why was it able to close below the inefficiency? Doesn't that indicate, as I teach, early warning signs that it's probably not likely as bullish as we all would like to see it be if it's going to go for all-time highs? It's an early warning sign, basically. Then on Monday, we open here. We rally all the way up to the high of that inefficiency. Couple handles above it, which is permissible. Remember, we're dealing with a daily chart. Okay, so if we look at that candlestick's low, comes in at 30,337 half. So 337 half, and the high I think was in the 40s. Yeah, 343 even. So 6.5 handles, or 5.5 handles rather, which is very small, thin margin for disparity between this specific candlestick's low, which is the high of this SIBI. Again, this little gap right here from that candlestick's low and that candlestick's high. That's the very gap I talked about last week. So we opened up not above consequent encroachment of that gap, not above the consequent encroachment of this wick. It was below. And then it rallied all the way up to the high and then started coming down. Okay, so when I'm looking for price to get into a short, if I'm getting early warning signs that last Friday we closed below a key PDRA level, which is the low of the SIBI there, which is this candlestick's high. Then we opened not with a gap higher. We didn't get that. We just had a gap, small little, separation between the two. If you're looking at the daily chart, but then it rallies up and goes to the high of the SIBI, but it can't mount a continuation. So because it's done this, I'm going to probe a run back to new week opening gap. So we're looking at price trading to this level here, which is I'm delineating two points of time. And it's the high of 7 o'clock in the morning, Eastern time, Monday, to 9 a.m. You know about that time. It's a pre-market session time. So there's two bookends, they're parameters on that time range. Okay. And I think it would be very easy for you to agree that this high down to that low is the dealing range between 7 o'clock in the morning and 9 o'clock in the morning. If the market is trending, then you're probably going to get a little bit of consolidation and range bound price action initially in the morning. Did we not get that? Sure, it did. But this is what you're going to grade the high down to the low. So there's your quadrants and your octants. Okay. Ideally, you want to see price action. If we're looking for lower prices, which is the new week opening gap down here, and we'll scrub back over here, show you where it came from. There it is. There's that gap. So it's new week opening gap. And we have price meandering around in here. So what I was looking at is when we first created the short-term little low right here and rallied up, creating that high. When we started to trade softer, the 30,137 half level, I'm going to show you where I got that from, why I posted it yesterday. From here to that low. And then do -5. Oops, wrong one. -0.5. There it is. Okay. And you'll see it down here. See? Now, because I think that's a draw, why is that a draw? Because it's the first leg from here using what? The low of the dealing range between 7 o'clock and 9 o'clock. That's not random. But this high that formed at 9:32, not because it's a specific number, it's just that's the high it formed after 9 o'clock and then started trading softer. It was already moving lower before I posted this level. It's an evolving projection, meaning that while we had this high here down to this low, we can then use any higher high than that, which is what we get over there. Now, this high is important because it's doing several things. I'm going to take this off. Just remember the 30,137 half was just 2 ticks above the 137 level projection based on the low that anchored from between 7 o'clock and 9 o'clock in the morning Eastern time to the initial high that formed after 9:30 opening. So it also traded up into that SIBI, traded down to the new week opening gap, rallied up, failed to take out that high on this rally. This low took out that low. So it's doing the very things I talked about Saturday. And I talked about this before, where if the pre-market session time between 7 o'clock in the morning, 9 o'clock in the morning Eastern time, if it's trending in pre-market session, price action, it's not going to be a clean price run in the morning. Now, couple that with if I'm saying that we're going to look for 30,137 half, that's down here. So what am I indicating there? I'm indicating that I'm expecting price to go lower. But it has to do what after 9:30 opening? Ideally, we want to see a Judas swing. It's some measure of protraction higher. That's where smart money kind of like draws in the crowd to chase it going long. That's this. All this price action right up here. And what is it doing? It's going above half of this range. Right here. That's the consequent encroachment of this range. Or in this case, because it's a range, is equilibrium. So it's high to low, halfway point here. We're really in a premium now. And it goes up to buy side, sweeps this out there. So what do you think it's going to likely do? It's already returning back to an old pool of liquidity. Over there. So if last Friday morning session, this area here, it's being swept. Why is it important? Because it's already done this, Michael. Why are we even concerned about that? Because during this period of time, that's electronic trading hours. So price needs to book real delivery, and it may require redelivery to levels we've already seen in overnight Globex. Okay, so overnight London session, that type of stuff, Asia. So we're going to need to see this level be traded to if we're opening up down here, as we did yesterday at 9:30 Eastern time. So now this thing can evolve further, where we can now take this high and then anchor it down to not only this low here, but we've already breached this low. So now we can use this low here. So we have high to low, and we can then do a measurement from high. I'll fix that in a second. To that low. So there you are, two different price points. And then now you can do your projections. A reasonable one would be down here. I'm going to change this to, we'll do in honor of Prince again. There's a standard deviation between that low, that high. Not a bad little target right there. Okay. And that comes to 30,090 even. Okay. But because it's moving lower on the daily time frame and it failed so much yesterday based on what last week's PD arrays were indicating, we didn't open up with a gap higher Sunday. It wasn't any kind of real significant influence to suggest continuation right out the gate this week. We can then now do projections like this. We can do -1, and we'll make that also purple. And you can project. There you go. So if it takes out this leg's low, we could see if it can reach down into this level. Goes a little bit sideways. Ultimately, it picks that level off, grading out the 7 o'clock to 9 o'clock in the morning Eastern time pre-market session dealing range like we did here. Carry that forward. We have initial range-bound choppiness. Okay, it's not random. It's not beating you up. If you don't know what you're doing, it would be. But trades down into new week opening gap and then starts its protraction higher, clearing out the high of the morning and clearing the high over here, where this nice dynamic drop. Where yesterday on a short little 10-minute video, I told you that I'm looking for new week opening gap when it was trading here. So that's bearishness. It got down to it several different times in here. It rallies up, clears the buy side. And because it's done that, with all things being equal, as I indicated here, it didn't give a strong showing at the new week opening gap. We only went up on this rally here to tap the SIBI high on the daily chart, which the high was 30,337.5, and it went 5.5 handles above that to create the high at 43, so 30,043. So that is the little tiny little blurb, okay, above the high of that SIBI. And it doesn't stay there long. See how quickly it gives up the ghost? And then we went up into this level here, which creates the high of 7 o'clock to 9 o'clock in the morning. Mid-range equilibrium of this range from high to low between 7 o'clock in the morning and 9 o'clock in the morning. Forget everything else that's in the price chart right now. You're only worrying about this range. Okay? You don't care about this because this was them doing what? A wick on the daily time frame. The wicks can do the damage. Disregard that. The real story is going to be between the bookends of 7 o'clock and 9 o'clock in the morning. This is what we've been teaching. Okay? High to low, grade that. Carry those levels forward. When we get to this protraction going higher, we get a buy-side liquidity pool. It takes the liquidity, does that high hit the upper quadrant of that dealing range, high to low, which is this level right here. Does it hit it? No. If it would have, I would have added more there. But now we're going to drop in closer in price action. You're going to see Obsidian now. Obsidian is a PD array where you see a wick like this. While I'm expecting price to eventually turn and go lower, I look for these wicks like this. And then if there's an opposing wick that forms, it has to be above it now. This wick, and then we have this wick here that's going the opposite direction. So what's happening here? We have a wick that's above the candlestick, and then we have a wick that's below the candlestick. We're grading both of those. The halfway point is there, and on this one, the halfway point is there. Extend those to the right. The market trades lower, we close below it, and then when we get up in here, it proves to me that it's not willing to put a body in its first run up in here in the half of that. So between this candlestick's consequent encroachment, this candlestick's consequent encroachment, this little range, this portion of price action is where my focus is. Now I shorted higher, but I want to build, anytime it enters in here, I want to build the position up to go lower. And again, I'm aiming for the first target, which is low hanging fruit, 30,137.5. which is 2 ticks above the projection I just showed you at 30,137 even. So when we pull up the executions, there I am shorting as it's running up right there, as it going right into that old pool of liquidity. And if it would have traded to that level there, which is the upper quadrant, I would have added to it. But I'm looking for it to fail there. I want to see it not reach that level, but clear the buy side at that level here. That was an old buy side liquidity pool from Monday's morning session. I'm sorry, Friday's morning session last week. So we'll take this off. The market breaks down, and we start approaching this level again. And I'm doing it with market orders. So you got to take it for what it is. But my focus is anywhere in this area here or in close proximity to it, I want to anchor and build in. Anytime it keeps tapping inside there, I know what it's doing. It's building a false consolidation that bull flag traders are going to see this. It's going to continue higher, and it's going to deny them because of everything I indicated thus far. That's why I was bearish. Okay. If at this point, if you don't know what makes me bearish and why I'm doing this, rewind this video and start all over again and pay close attention to what I'm describing on the daily chart and how we did not open this week a certain way and the things that we saw on the daily chart. And then we obviously weren't giving all that much bullishness because of the price action. Despite this run here, which was protraction after 9:30 in the morning. So we get this run here. Now, what I'm doing is I'm nailing down from this wick low and this wick high. I see a gap. So I'm putting something in there because I'm pretty confident that we're not going up here. And then now when it does this run here, that confirms to me that now I have obsidian. Obsidian is 2 wicks opposing, and the second wick has to be higher than the first one when you're bearish. You have to be right on the direction of the marketplace. You have to know what you're looking for, the narrative. You have to be on side. You have to know all those things, or this isn't going to work in your hands. Okay. And I know some of you are going to come out here and say, oh, I tried to do this and I hired a staff and we did all these things. We tried to program and it doesn't work. But yet here I am doing it. Okay. So I don't know what to tell you. Here we are right in the middle of it, getting filled there. And then right there, I'm trying to nail as I was going around and banging in here. I was trying to slide into that and get the low of it, but it didn't work so much in my favor, but it's still nonetheless delivering. And then finally, it went aggressively lower than that, went lower, and that's the business. Now, this is intraday trading using market maker sell model. Me entering on smart money reversal, me entering on low risk short, holding through first stage distribution, second stage redistribution, there, sells off heavy. Running through original consolidation. There's that fill. So the logic is sell side being targeted of a market maker sell model.